one is it has to have a particular formation.
Yeah.
It has to line up just the right way, just the right time, and it must look a certain way for a high probability trade, and that gets me into the trade.
Yeah.
And it's almost like you've got a template, like an overlay. Right, here's my template. How does that chart look? Oh, it's not quite the same, or perhaps it's well off. Or
And some of those patterns, like you sort of hinted at, you've got you like double bottoms and things like that. And
not so much. It's more. I've got some unique ones that I think are. I wouldn't know if I'm the only one who knows them, but I haven't seen them around. But I've got some setups that I have sort of formulated over the years. But reversal bars, and now they're very popular. They'll call lots of different things: pin bars, reversal bars, double reversal bars. The way certain formations happen and they line up correctly. But I probably have I would say about 10 or 15 particular patterns that I'd like to see, which over the years have a very high probability. So when I see those, usually round about support or resistance, where supply and demand is, or a trend line, or major highs and lows that haven't been retested for a long time, or some kind of event, even Fibonacci. I'm very keen on Fibonacci. You see, if you've got a confluence, if you have a lining up of a lot of things, like you might have support at a particular level, then you might have a Fibonacci retracement at that level, then you might have a pivot point at that level, then you might have a trend line at that level. Now, if you've got 3 or 4 different things at that level, and then you see the formation that you're looking for, that's a high probability trade on either side. It doesn't mean that you're always right, but the probability is that when all those things line up together, that makes it a much higher probability trade, and they don't line up that often, which is why it's not practical always to trade every single day.
That's why I believe that so many times price action becomes self-fulfilling. It's because all those things that are lining up, and so many other people are looking at those things, that they make a decision based on what they're seeing, as opposed to any other perhaps reason. It's just that they realise that Fibonacci thing, and then there'll be X number of people reacting to that, what they've observed, and then there'll be X number of people reacting to the support level, and it just, as I said, it just self-fulfills, and the pattern evolves and completes because everyone just sees this at the same time and does it all together almost. But I reckon that happens a lot.
Is this, do you think what you're talking about now, this particular method, is it market specific? Is it time frame specific?
No, it works in any market in any time frame because it can't not work. In other words, it has, if it's price driven, every market has a price that moves up and down. It finds levels where it finds resistance or support, so it would work in all markets.
Perfect.
And all driven by people. All prices all driven by people, so it's the people reacting to different things.
And every market is, but every market, although it works in all markets, every market has its own personality. The stock market, and Stuart's the expert in the stock market, has a different personality from Forex. Although they're very similar, and even the type of traders, I think that a stock trader is a slightly different animal from a Forex trader, who's a slightly different animal maybe from an options trader. I think the personality is slightly different, and maybe that's why you feel comfortable. For a long time I used to trade indices, and which is a much faster moving, I used to think Forex was fast until you start trading the S&P or something like that, then you know what's fast. Or the Dow was another favourite of mine, and in a 5-minute chart in the Forex you can watch this thing move up and down, and then you suddenly watch the Dow Jones and it races up and down.
Massive.
And I suppose, okay, we talked a little bit then about how you get in, and you talked about, I think, time frames, and you're comfortable with longer, holding positions longer, and obviously that's got to do with the width, how wide you set your stop. How are you getting out of trades? Is it similar? Are you looking for patterns, or do you have another method for getting out of a trade?
I like to have targets that I'd like to head for, but generally the targets, the stop losses or the orders to get me in and out of the market are really there as a safety valve, because I like to see how the market develops, because you might have a target of whatever it is, But if the market's behaving in a different way, it might be racing ahead. I mean, if you look at this recent break in the dollar, you'd be crazy to get out of the market. I mean, it would just drop like a brick. Now, if I were to, it probably would have taken me out of the market. But I'm still in the market because of the way the market looks, and I think that's a little bit of experience, if you like. Because everything lined up so nicely and the market broke in a nice way, I could see that the potential was a lot more than, say, 200 pips or 300 pips. It was a major break, so I anticipate the market to move farther than a normal break. But at any stage, if I check in the market and it's not reacting that way, I'll close the trade immediately.
Yeah.
So it depends every day. It doesn't matter who it is. You can't tell the market. Nobody's psychic. You don't know what's going to happen the next day.
Yeah. I think that's key. And so many people with their trading systems are trying to predict what's going to happen rather than being more reactionary. What's going on in the market? Let's look at price action and what we're going to do based on that. I think a lot of people, they doggedly stick to, I think this is going to happen. And then when that doesn't happen, they'll hold on, waiting for that to happen. And that's what causes people to hold on to trades too long or get out too early.
It's the two P words. Too many people think about profitability and not probability. And they should think about probability.
And holding on, I think one of the first things, I don't know if you agree, Stuart, in trading is not to worry about making money, is to not lose.
Absolutely. Yeah, we're talking about protecting the capital. Absolutely. Paul Tudor Jones, don't focus on making money, focus on protecting what you have. Yeah. Say it all the time. Absolutely.
What was that thing about the cricketer as well, with protect your wicket?
Steve Waugh. Former Australian Test cricket captain. He was asked, what's the best advice you've ever given? And he said, don't get out. Of course making runs is important, but how are you going to make runs if you're dismissed?
Yeah, and if you run out of money, you can't trade.
Yeah.
But I remember there was a friend of mine who wanted to get into trading, and he wanted to know if it was hard or difficult. And I said to him, I'm actually psychic, and I'll prove it to you. And I'll show you how easy this market is. And it was on the first Friday of the month, and it was 8:30 New York time, and I put him down in the market, and I said, in 30 seconds this market's going to shoot up or down, but it's definitely going to go one way. And he says, I don't believe you. And he was watching this, and the market leaped like 200 points in 30 seconds, and he goes, wow, can you do this every time? And that was actually before news trading became so popular, but you can't predict what's going to happen. So money management and staying in the game is the most important part.
The key. Which leads me to a question I do like to ask, because it's one thing that crops up all the time. People always like to know, if you're so successful trading the markets, why is it that you're out there teaching others how to do it? Wouldn't you be better off trading the markets and sitting on the beach somewhere and just counting your dollars?
It's an easy answer to make money. That's why I teach people how to trade the markets. I don't think anybody, it doesn't matter how philanthropic you would like to be. First of all, your first objective is to make money for whatever you're going to do with it. But trading is a business, and there's lots of different parts of a business. And if you think of learning trading, you probably couldn't learn how to count unless somebody read a book at some time. Somebody has to teach somebody.